Money day, guys and girls. Welcome back to another episode of Market Mondays. You're here with your host, You're Learning with Vel. And of course, for those of you who are new to the channel, this channel is all about providing you guys with an educational outlook on how you guys can look at the Forex market as well as the crypto and commodities. Now, in this episode, we are going to cover the US dollar. Okay, the US dollar interest rate will be taking place this week and it will cause a disruption in the market. So we're going to be looking at how we can understand these disruptions. You know, I always tell you guys that we're not going to we're not going to foresee what happens. We're going to react based off of what does happen. So I'm going to highlight some potential possibilities. I've also got a short that I'm looking at on gold, which I've sent out inside the community. It's already hit TP1. So guys, stay tuned and let's get into this. Okay, so the first thing we're going to have a look at is, of course, the economic calendar to see what is taking place throughout this week. And the most significant news that we do have taking place will be the Federal Reserve interest rate decision. Now, we do already know that the interest rate, or should I say the inflation targets, has been a huge concern for the whole central banking system internationally, not just the United States. We're talking Bank of England, Australia, Eurozone, all of them, okay? Last week we did have the Eurozone interest rate cut, so it's most probable that we will have a rate cut for the dollar as well. So that is going to be the biggest news that takes place throughout the week. We've got CPI as well as crude oil inventories, CPI for the euro and for the pound. On Thursday, we've got the Bank of England interest rate, guys. So it's a blockbuster week, okay? It's a blockbuster week. We've got jobless claims taking place on Thursday as well. And on Friday, we've got the Bank of Japan interest rate. So we've got 3 interest rate decisions throughout this week. We're going to have a look at how these interest rates will affect the markets. But of course, if you're new to the channel, then you have to make sure that you click the link in the description below so that you guys can get access to my free Telegram channel where I provide you guys with access to trades. I provide you guys access to education and a lot more. Now, if you haven't already, smash that like button, subscribe, you know the vibes, it's lit side. Now, I sent out this sell, okay, inside my community. And this sell was actually at 2571.50. So if we come down here, we can go 2175.50. Let's type it in just so that we're accurate. 2175.50. Okay. This was the entry that we had, guys. The entry was phenomenal, as always. And with the entry, what we've seen, we're already risk-free with this trade. But we already had the first take profit target hit. We haven't yet had the second one hit. Okay, we had the first one hit. Price came down, gave us just shy of 46 pips, and we're waiting for price to continue pushing down lower. I will be targeting the lower areas. Of course, guys, naturally, we've seen gold have an all-time high. So when we look at targets for gold, we want gold to come down as low as 2,000. I told you guys this on my previous Market Mondays, okay? 2,000, you might be thinking this guy is crazy. Well, no, I'm not crazy. If I go onto the daily time frame here, guys, you guys can see from the daily time frame, if we come down to as low as 2,000, where's 2,000? 2,000 is down here, okay? On a daily time frame, what this would do is this would clear a lot of the liquidity that we have below in this area and in this area, as well as in these areas here as well. On a weekly time frame, we can just see a bullish schematic, and on a monthly, it's even more bullish. But what we can't ignore is the fact that we have a significant level of structure around the $2,000 handle, as well as a lot of imbalance, as well as a candle that we could play off of as well. So I'm not saying that the trade that we're in right now is going to push us down to this level. I'm not saying that at all. But what I am saying is that if we can continue to get a bearish direction towards this low down here, guys, then any pullbacks back upward would actually give me confidence to try and sell this. Now, I tell you guys all the time, when it comes to gold, it's best to sit on the sidelines because we do know there is a massive manipulational play at hand. Okay, central banks have come out and announced months ago that they've been buying gold, which has already disrupted the markets because usually when economies perform poorly, commodities do very well. But what we've been seeing is the stock market has been making all-time highs, and so has gold. So quite clearly, one of them are lying, and one needs to come down. of course, I would believe the stock market needs to come down too, but naturally gold needs to have a pullback in order for it to continue pushing. Now, gold may just reach $3,000 an ounce, as I've previously mentioned, before we get that pullback. That may or may not be the case. We're going to find out. But what I can say is, with the interest rate taking place, okay, we're going to go over to the bonds, and I've got a reminder here for you guys that I tell you guys every single time. If bond prices goes up, that means interest rates have gone down. Now, when we have a look at the economic calendar forecast here, we can see the interest rate is currently at 5.5%, and they want to cut it down to 5.25%. So if they do manage to cut the rate, okay, that would be stronger for the bonds, and it would be weaker for the bond yields. Hence why it says here, if the bond yields are connected to inflation and interest rates. So if they go up, so does the yields. Okay. Now, based on the information I've just told you guys, we're expecting the rates to go down. So if the rates go down, this should push the bond yields down, which would in turn push the bonds up. Now, providing that happens, guys, this would push up the dollar. The dollar follows the bonds. The bonds are the Mac Daddy. For those of you who are my students, you would have heard me tell you this time and time again. When the bond prices push up, that eventually pushes up the dollar too. So if we can get a stronger dollar, guys, that would actually further support a short with gold, which of course we're currently in. We are risk-free, so even if price does tap us out, it's not a problem. We're not going to lose any sleep, because we're certainly not losing any profit. Now, or should I say, we're not losing any money. So with that being said, we're going to move across to silver, and we're going to have a look at what silver's doing, just so that we can kind of grasp what is happening with gold, if gold is potentially going to keep pushing higher. Now, I've told you guys already, if you're watching this for the first time, buy silver. Buy silver, buy silver. Silver is one of the most underappreciated assets in the commodities sector. Okay, it's only $30 an ounce right now, whereas gold costs $2,500 an ounce. So it's very clear that you can buy more ounces of silver than you can of gold if you've got, let's say, 10,000 pounds, for example. So with that being said, what we now understand based off of that is, over a longer term period, yes, we do want silver to make an all-time high. I'm not saying that silver needs to push down as low as $10 an ounce. No, I'm not saying that at all. But what we can't ignore, guys, is that naturally, when we see structure broken, when we see price pushing up or coming down, we usually get a pullback. So right now we're sitting inside of this daily candle, and we want to see what happens. Okay, we want to see if price is going to respect this candle or if price is going to push above it. At the moment, the formation looks like price is failing to close above this candle and could be pushing down into the lower room. Okay, if that does happen, that of course is going to help us with our short in gold, because of course we want gold to come down lower as well. So when we go across now, I'm going to show you guys, where are we? Euro. Oh, that's Euro NZD, Euro USD. Okay, Euro USD, for those of you who are new to the channel, it's a low risk moving pair. So if you're new to trading, it's a great pair to start practicing with, because it probably moves around 60 to 70 pips per day on average. So it's not gonna, blow your account as long as you're not trading with any crazy lot sizes. But when we look at this on the line graph, one thing that I want you guys to understand here is we have got a lot of liquidity above. Okay, and what I tell you guys from an educational point of view is that you need to follow the money. If there's more liquidity above than below, price will always push up. If there's more liquidity below than there is above, price will always push down. Now, when we look at this chart, what we can see here is there is a lot of liquidity above. Okay, there is still some below as well. Okay, we can't act like there isn't some below, but there is a lot of liquidity above. And for that, what we could be seeing right now is price continue to push higher just for the short interim before we potentially get price coming down lower. Now, whether we take out this low down here, it's debatable. Okay, it's really debatable. This high, it's really debatable because, of course, we do understand we have the interest rate decision taking place for the dollar. Now, of course, if the dollar grows some balls and it gets stronger, then this is going to come down like Titanic. If we look across to, what have we got here? If we look across to GBP USD, it's the same thing, guys, okay? Now, interestingly, I was speaking to a student earlier today, and I was saying to him, look, when we look at go GU on a daily time. Sorry, when we look at GU on a line graph, okay, we can understand that eventually. I was gonna say gold there, guys. I was a bit tongue tied. Sorry. Eventually, I was gonna say it again. Eventually, GBP USD does need to push up because all of the liquidity is above. Okay, so because we understand this, that doesn't mean, hey, let's get into a buy straight away. No, but what we understand is that because we've seen price make an all-time low, the majority of the liquidity is above. So we are targeting higher prices, okay? It's just a real slow moving train. But hey, if you're able to buy in any of these lows, guys, it's going to be a magnificent time for you to hold one of these trades. So we need prices to come down lower for us to even contemplate buying, okay? And off of the weekly time frame, I'd be looking at price coming towards the 128 handle. If we could get back into this area of structure, I would be more confident to think about placing a buy and go into a smaller time frame to show you guys. Okay. As always, I want to show you guys the Japanese yen basket. We do have the Japanese yen interest rate taking place on Friday. Now, we know that the Japanese yen has had a negative interest rate for over 2.5 decades. I think almost 3 decades. So because they've just now gone into because they've gone into a positive interest rate, it means now, of course, with everyone trying to cut their rates, the Bank of Japan probably aren't going to cut anything. Okay, their economy has been sustainable for such a long amount of time that they haven't needed to change their rates. Okay, when an economy is changing their interest rates, it's because they're changing it based off of the statistical reports. The reports might say that people are spending less. It might say that people aren't purchasing as many products. It might also tell you that there's more people unemployed. Well, because of Japan's economy being so stable due to their infrastructure of how they've built their economy, they tend to not need to worry about changing the rates so much. So essentially, guys, I'm looking for a stronger yen. I'm looking for a stronger yen to continue pushing higher. I would like to see what we're currently seeing right now, which is this pullback. Okay, if we can get a pullback into this higher low, then we would be expecting price to push up and make a higher high. If we look at it on the line graph, we can see price already broke these bearish structures, which left us to be bullish. We broke this bearish structure, which was significant. Okay, price came down. And now if we looked at a pullback in this area, we do kind of want to be seeing price turn around in and around this area here, right here. Now, if I use the Fibonacci to show you guys on a daily, pretty sure this Fibonacci would be fairly close to where I want to buy from. Look at that. Absolute perfect, guys. Okay, it comes down to the 70%. Of course, if it could come down, feel some more of the imbalance, it would be perfect. At the 79% would be even better. But ultimately, inside of this area is where we want to draw our attention so that we can focus on potentially going long with the yen as well. So that's going to take place on Friday, which just means the market may not really react until the following week. But as you guys know, when we look at trading the Japanese yen, we're able to get into positions that we're able to hold for quite a considerable amount of time. We held this move here, which gave us over 1,600 pips on AUD JPY. We also held some really nice shorts. This is USD JPY. We also held a really nice short on Euro JPY. This short lasted for 1, 2, 3, 4, 5, 6 days. Okay, it lasted for 6 days. And then prices pushed back up. But of course, guys, naturally we want to see a pullback. Naturally, we have to make sure that when we sit on the sidelines, we're saying, look, we just got a move that we was in for 7 or 8 days, 6 days, right? Sometimes we might have to wait another 10 days to get another move like that. Just like when you're late to work, arriving at the train station, rather than you jumping on the back of a train, which is suicidal, you would wait for another train. So we just need to wait for another opportunity, okay? And with that being said, whilst we're waiting, the higher this pushes, the better it is for us because we want to sell from as high as possible. The basis of economics is to buy low and sell high, right? So in Forex terms, we want this pullback to come up as high as possible so that we could get into a short from as high as possible to ride this baby down. So Euro JPY is going to be on my hit list. I'm going to be looking at this and seeing how it reacts throughout the week. I'm also going to get into US dollar Mexican peso. Now, my alert went off today which is really good because we're approaching areas where we would like to see how price responds before we potentially think about going long. Now, we know the interest rate is taking place tomorrow. I would like to see price come down into our buying territory. Price needs to come beneath this 62% or on it. And if it can do that, guys, we are going to be going long on this. So right now, I measured this out on last week's episode, and that was just to show you guys, hey, look, price could react from where it is right now, because from a weekly perspective, we've played into this candle, it could react, but we don't want it to react from there. We're hoping it doesn't. We're hoping actually this week continues selling, which we're not in, okay? We're not going to sell down to here because at the end of the day, we don't know if it's really going to come down. But what we would like is for price to continue pushing lower, more towards this significant structure handle so that we can see a retest. Now, if you're not inside the Telegram, you guys simply have to click the link in the description to get access so that you guys can be alert and stay up to date with these trades too. This is going to be a trade that you guys would make a lot of money on. As you guys know, when I trade the peso, these are trades that we get to hold for days sometimes, and these trades are as good as trading gold because in terms of the pip value of what you get in return, this pair in particular does pay really well. So we want to be patient with this. We want to see how this works out. We don't want to force our hand. We don't want to get too anxious. We just want to see how price reacts. Price may pull back up and continue coming lower. We want it to come lower. I just told you guys of Euro JPY. Okay, in this case, the lower it comes, the better it is for us to be able to buy this and go long. So US dollar Mexican peso is also going to be on my hit list, guys, and I'm going to show you guys NVIDIA. A lot of you keep asking me to do another breakdown on NVIDIA. We've done a lot of, we've had some successful trades with NVIDIA. We've bought in at $90. We bought in a bit high as well at 123, guys. But ultimately, we're in this for the long run. We're not in NVIDIA to get in this week and get out tomorrow. We're not day trading NVIDIA. We are investing into this to see how we can work our money for itself. We're involved in NVIDIA to see how our money can work for itself over a 6-month period. For anyone investing into stocks, guys, you need to think, if you don't have a pension, investing into a stock like NVIDIA is as good as investing into your pension. Investing into a company that's got more capital appreciation would make more sense. It would make more sense for you guys to purchase $10,000 worth of NVIDIA shares than to purchase $10,000 worth of Bitcoin. Because if Bitcoin value is above 60,000, for example, and you've only got 10,000, then you haven't even got a Bitcoin, meaning you need Bitcoin to go to 120,000 in order for you to double your 10,000, which doesn't make any sense. There's other assets that we can get involved in that can make us a lot of money. So with that being said, let's move away from NVIDIA, but I've kept it on my list and I will continue to keep you guys informed with that. I'm going to show you guys Bitcoin. Okay, I'm waiting for Bitcoin to come lower. I want Bitcoin to come as low as 30K. I've told you guys this before. How Bitcoin is at the moment, it looks like it is going to push up. Now, we had a really successful trade here with Bitcoin last week. Every time we trade Bitcoin, guys, we have a success. Sometimes we get our fingers burnt because it's human, okay? I am human. I do have bad trades sometimes. But with that being said, for the most part, when we get into a trade, it's about understanding if the trade is in the right direction or if we're just in the wrong. It's about understanding if the trade is right, are we in the trade at the right time? Okay? It's a bit late over here, guys, so I'm a bit tongue-tied. You'll have to bear with me. But ultimately, this looks like it is going to push up higher, take some of the liquidity from above. If prices could reach up to 88%, even better. Let's see what happens with Bitcoin. Right now, I haven't got a trade. I've got no analysis for Bitcoin. It looks like price wants to continue pushing, so I'm going to let it push. I'm going to let it do what it needs to do. When I look at the NASDAQ's not showing me anything. It showed me that it made a gap from over the weekend, and it hasn't actually filled the gap, so it could keep pushing up higher. We have to sit on the sidelines and we have to be patient. The Bitcoin Trust Fund, which I use to cross-reference Bitcoin, this also looks like it could push up. So we just have to sit on the sidelines, guys. There's no problem with sitting on the sidelines. Now, I'm going to show you guys oil, because oil, I think, could be a really nice move for us, guys. It's been sitting inside of this area for quite some time. We want price to push up. If we can get a pullback on this, guys, we are going to have a very juicy sell. I had this candle marked as a level, but if we look here, if price can push up to this area, I'm going to set an alert and keep you guys informed inside the Telegram channel. But the higher this could go, the better it would be. When we look at this on the monthly time frame, This is pushed up and this looks like it's coming right down. So we do need to stay patient, guys. The crude oil inventories will be out on Thursday. And of course, every time this is released, it does significantly impact the market. So we have to stay patient. Sometimes these episodes are going to be very, very juicy because there's going to be a lot of moves happening. Sometimes these episodes are going to teach you guys to practice patience. Patience is more important sometimes than taking trades, because unfortunately the destruction, or unfortunately the reason why people blow their accounts is due to them not being patient. You can't rush to come up, you can't rush the market. If the market's not moving, then that means you shouldn't be inside of any of these trades. So the last pair I'm going to show you guys is Euro AUD. Now, you guys already know I trade this off of the daily time frame because the daily time frame gives me a lot more success. We've seen price push up into our area, price has come down, okay? And like I told you guys on the previous episode, I want price to come down into this area and then push up. Now, we haven't really seen price move. Price has been quite slow, and usually that would signify the calm before the storm. So I'm not convinced that I'm not convinced that price is prepared to make a new low from where it currently is. I would like price to come down into this area, retest it, push up, and then come down lower. With that being said, of course, we don't have any news taking place apart from the CPI on Wednesday for the euro. So I'm not really too optimistic about the euro making any crazy moves this week because we do have the dollar and the pound. So I am going to provide you guys with a further insight for more pound-related pairs and dollar-related currencies. Ultimately, guys, we want to be going long on USD Mexican peso once we get a sufficient pullback, okay? If the dollar is going to, of course, be pumping, then that means we could get a nice buy on USD Mexican peso because this pair is not too heavily manipulated, meaning that the Mexican peso doesn't really stand a chance against the dollar. This pair is purely moved based off the strength and the weakness of the dollar. If the dollar is weak, this is coming down. If the dollar is strong, this is going up. So we want to see what can happen, guys. We want to wait for price to push down a bit lower. Hopefully it does. And when it does, we're going to be right here ready to attack. So again, if you're not inside of any of my channels, then I'm inviting you openly to join the channels, have a look at the trades, have a look at the history, see what I've done, see what I provide, see what value you guys can gain from it. And of course, as always, guys, if you're watching this video and you're new to the markets, or you're experienced, or you just simply are trying to learn things by yourself online, then my channel is going to help you. My channel is going to help you with understanding why fundamental and technical trading works hand in hand. I've been your host. You've been learning with Vel. Thank you guys for watching. Hope you guys enjoyed the show, and I'll see you guys on the next one. So always remember that every day is money day. Peace.